Hi folks, welcome back to the channel. It's portfolio update time, no messing around, lots to get through. Let's just get straight into it. Trading 212 time, and a quick look at this, and I'm sitting at around £17,878. So this is my ISA from the last tax year, 2020 to 2021. At the moment it's sitting at about 3.49% up. It doesn't really mean anything. I've mentioned before in one of these videos, I moved an awful lot of my investments into this particular ISA, and at that point in time, the clock resets, calculator resets, so everything is just judged at the point in time when you put it in. So from the turn of the year, I guess then that's 3.49% up. So it really doesn't mean very much at this point in time. The only thing I'm concerned about is seeing that ticker keeps going up and up and up. So it has been a pretty wild couple of months in the stock market. If we go back even to a 3-month scale, you can see just in the middle of June there, it's about 1,400 quid behind, about 8.39%. That has all turned around and we're sitting again in profits, but those particular figures don't really mean an awful lot. As I mentioned before, the rate at which money moves around between my accounts, these figures very quickly start to mean almost nothing. So we'll have a quick look down here and we'll see what we've got. Amazon, they had their stock split recently, and now I have 12 shares in Amazon instead of 0.5, I think, 0.6 maybe I had, yeah. And it's doing pretty well now, 8.4% up. Coca-Cola, same, good dividend payer, solid company, one of my best performers. I've had these stocks for a long time and I'm quite happy to hold Coke. iShares electric vehicles is sitting around middling. I think very much electric vehicles are going to form our future, whether we like it or not. Petrol heads everywhere will be pretty disappointed with my outlook, but I think it's inevitable. We can't keep going the way we're going. Things are going to have to change. In the same sort of vein, iShares Global Clean Energy is doing pretty well for me there at 28%. It says here, again, it's not an accurate figure, but it's a pretty healthy return on that so far. Legal & General, provider of financial services here in the UK. Not going so well now, but they pay a pretty hefty dividend. It's a nice, solid company that you'll probably find in most UK investors' portfolios. Microsoft, they're doing pretty well too after a bit of a dip. A lot of my portfolio is showing green here and I'm pretty pleased about that. It's refreshing to see after such a long time just in the doldrums there. National Grid, doing pretty good, ticking along, pay a decent dividend, fairly stable kind of share. Happy to hold this. Palantir's a disappointing one. I honestly thought these guys were on for bigger and better things when I started to buy this stock around the $25 mark. You can see over the past week or so, the past month, things have started to go on a bit of an uptrend, but if we have a look at their max chart, they were up there $36 a touch, right down to about 5 or 6 maybe, and then up again to about 11. Very volatile, bit of a Marmite stock. Won't be looking to add any more of these this particular time. Unilever, a fairly solid UK stock again. They've got all kinds of brands. You're going to find them in your cupboards. Pretty defensive stock, but actually doing okay at the moment. VanEck Video Gaming and Esports ETF has taken a bit of a hit. I still think video games are going to play a big part going forwards. I suspect this drop off has come largely due to the general fall in the market, but also because people are getting outside again, spending less time in front of their tellies, less time in front of their games, and that's had a reflection on the stocks and shares that make up this particular ETF. The rest are my Vanguard ETFs, and you're going to see those in my InvestEngine update in just a second. But we've got Vanguard FTSE 100, All World, High Dividend Yield, Developed World, Emerging Markets, and the S&P 500. So they make up the bulk of this portfolio, as you can see. It's generally how I do my investing, as you well know. Unfortunately, Trading 212 still haven't quite cleared their backlog, so you can't really get access to this particular app if you wanted it immediately, but it is definitely worthwhile getting on the waiting list. I have a link below in the description if you want to use my link. Eventually, when you get in, you and I will both get a free share. InvestEngine is where it's all happening this particular tax year for me. This is where it's all going on. In this particular ISA, I have a DIY portfolio, which is self-managed. I'm looking after my investments myself. Further down here, we have some InvestEngine managed portfolios, but we're not talking about those today. They feature in another video. So today we are looking at my ISA, DIY ISA, and at the moment it's £112.75 up, minus 2.31%. I don't really understand that, if I'm totally honest. I'm going to have to ask them what's going on there. How can I be plus money but minus percentage? It may have something to do with dividend payments or something like that. I'm going to get some clarification on that. But anyway, let's have a look at this. What I like about InvestEngine is that they are very much geared towards long-term investing. There are no individual stocks on this platform. You can only invest in ETFs. So here we are at the very start of the financial year. I dropped £1,000 in, and then gradually these rises here, you can see where I have been adding more to my account on a consistent basis. It tends to be in chunks of about 500 quid or thereabouts, but if there's more or less available, well, we'll put what we can into it. And so far this year, we are sitting at around £4,612 in this particular portfolio. So let's have a look. I've got the S&P 500, I've got FTSE Developed World, I've got the FTSE 100, and I've got the FTSE All World High Dividend Yield. So one point that was raised recently with me is that this All World High Dividend Yield ETF here carries quite a high charge, 0.29%. It's not that high, personally, I don't think. What it is high is relative to something like the S&P 500, which is 0.07. It's a high price to pay just to get dividends. There are dividend-paying companies inside the S&P 500. It's just that this particular ETF will focus on high dividend-paying companies. Having a look inside the ETF, which you can do with all these things on InvestEngine's platform, you can actually see what's in your ETFs, what you're actually investing in. You can see it's things like Johnson & Johnson, Exxon, JP Morgan, Procter & Gamble, Chevron. There's actually 1,567 companies in this particular ETF. Well diversified, all paying a bit of a dividend. I like it. I have to say I do like it. So with it just being made up entirely of these 4 ETFs at the moment, there isn't a whole lot to update you on here. Your only job as an index investor is to buy and hold. Buy and hold. Just keep buying, keep holding. That's my strategy until we hit that golden figure of £100,000 that we're looking for. So at this point in time, 4,612. We'll throw that on a pile. Let's see what we've got. Vanguard is the granddaddy of them all as far as I'm concerned. This is where I had my first ever ISA. As you can see, it's still going strong, £17,769 in here, which gives me a personal rate of return of around 32.48%. Vanguard have a very cool way of working out basically the internal rate of return. There's other videos on the internet that can explain how that goes. I won't get into it, but that is basically the time value of the money. So we're up 30% in just under 3 years. So I'm pretty pleased with that so far. So let's have a look and see what these investments are actually doing. In this particular portfolio, I've got emerging markets at around 7.62%, FTSE 100 at around 6%, All World High Dividend Yield at about 9.5%-ish, Developed World at about 36%, S&P 500 about 40%, and I've got cash, a wee bit of cash floating around. The thing about Vanguard is that they don't do fractional shares, so you're always going to have some money left over, some money left hanging about. It's a bit of a beef for me with Vanguard, I have to say. I don't really think they've moved on particularly well or adapted their platform in the face of the up and coming, finance apps that we're seeing on phones, likes of InvestEngine and Trading 212 and people like that. That said, they didn't get to where they got to by following the crowd. So it's very much a very firm platform for investing in index funds and ETFs. Take a quick look at the performance here so we can see that, from way at the start, 17th of October 2019, I started with about £4,000. It's now up to about 17,000 with extra deposits. Just a few days ago, I bought 2 more units of the S&P 500 in this particular ISA. Now, most of my investing is being done with InvestEngine. The thing with your historical ISAs is that any money that comes in through dividends or any kind of payments that don't leave your account, you can recycle those. You just can't add money to more than one stocks and shares ISA per tax year. So the money that this ISA is earning me can be reinvested as long as I haven't taken that money out and tried to put it back into Vanguard. So I was able to buy 2 more S&P 500 units here, VUSA. Unfortunately, I didn't have quite enough for the third, which is why this cash is still lying around. But that's all right. Having a wee quick look over the history here, you can see that April, May, June, we're quite a sticky couple of months here. The cumulative returns for those particular months, we're pushing nearly 1,500 quid. July is quite a bit of a turnaround, and August is off to a slightly lower start. But in the past couple of months, we've really started to recover what we lost earlier on in the year. But that's just the name of the game. Consistency, just let things go. Time is your friend. And that's us for Vanguard's update, sitting at around £17,769. Finally, I want to talk a little bit about my Lightyear portfolio. So this is a brand new app I've been trying out. Of course, there was a sponsored video just a few weeks ago on the channel where Lightyear wanted me to talk about some of the features they've got. I'm including them for the first time on my portfolio update. And while it's not in my ISA, it is an active sort of account that I'm using. I'm going to use it for a little bit more interactive investing, shall we say. So not trading as such, but I am going to be buying and selling some positions as and when I see fit. It's not going to be geared toward index funds. It's a little experimental portfolio. Now, before everybody gets too excited and says, but David, that's not your thing. I know it's not, but 600 odd quid here, as we can see, does not represent a huge portion of my portfolio. It's around about 1.5% at this point in time. So there's room for some fun. There's always room for a little bit of fun. So here we are, Lightyear app. So you can see at the minute I've only got 4 holdings here: DraftKings, Adobe, Coca-Cola and Disney. So I actually sold my positions that you might have seen in my first video that I took on. I've got SoFi, I've got Coinbase, and I sold C Limited as well. The reasons being is I just thought they had kind of reached my kind of target price for them, and I sold out. So at the minute you can see I've got £224 in cash here, 465 in investments, so there is some cash in the sidelines. If I see something I like, I'm probably just going to go and buy it. At the moment though, the only 4 holdings I have, as I say, are DraftKings, which is doing quite well, Adobe, Coca-Cola and Disney. £689. At the moment, Lightyear are only offering US stocks, but if you are interested in trying out this app, it is really, really fast. That's what I would say is really, really good about it. If you use my code when you sign up, DAV10, you can get yourself a free $10 to buy yourself some stocks. Links will be in the description, of course. As I said before, my strategy remains to keep on investing through the good times and the bad, and hopefully we're going to get all that good compounding. We'll get closer and closer to our goals. So we're sitting just over the £40,000 mark, and we're just shy about 3 years into this adventure. So the goal was to get to 100k. We're doing all right. We're going to try and stay consistent. We're going to keep plugging the spare money in there, and hopefully we're going to get all that juicy compounding going over the years. Any questions, please let me know in the comments. I'll see you in the next one.